Welcome to The Explainer. We're grabbing these complex sources and breaking them down into clear, structured insights. Today, we are getting real about the US-China trade conflict. We're going to look way past the political rhetoric and dive straight into the numbers, the history, and the hidden supply chains that define this massive global rivalry.
Now, you might be wondering, is America actually fighting the wrong economic war? It's so easy to get caught up in the loud, flashy political fights over trade. The narrative often gets simplified, but the data shows us a much more complex picture. What if all that political noise is actually distracting us from a much, much bigger global vulnerability? Because, let's face it, winning a few battles could literally mean losing the entire war.
All right, Section 1, from ping pong to tariffs. Okay, so to really understand why an American delegation is sitting in Beijing right now, we gotta look back at how this whole relationship evolved over the last half-century. Think about it. After ping pong diplomacy kind of broke the ice in the 1970s, China went from being a relatively small producer of low-value goods in the 80s to an absolute economic colossus. How? Well, through these massive, sweeping reforms in the mid-90s. We're talking reforming state-owned enterprises, unfreezing prices that the state used to control, and literally the largest domestic migration of people from the countryside to urban areas in history. And that incredible industrial revolution, it brings us right up to the start of the official trade war in 2018, where things shifted from cooperation to intense competition. And man, when that trade war kicked off, it was a classic, mutually destructive tit-for-tat. The U.S. flexed its economic muscle by slapping tariffs as high as 145% on Chinese imports. But no way was Beijing backing down. They instantly punched right back with tariffs up to 125%. It was just a pure heavyweight show of economic muscle that had immediate consequences for global trade.
Moving right along to Section 2, the trade deficit debate. So that intense tariff brawl was mostly driven by one massive political obsession in Washington, the trade deficit. But what does that actually mean for us? Simply put, a trade deficit just means we as Americans are buying way more mass-produced stuff from China, electronics, clothes, than the US is selling back to them in big-ticket items like aircraft or semiconductors. Since Americans generally have higher incomes, we consume more, pulling in massive amounts of affordable manufactured goods that actually help keep our daily consumer prices down. Now, here is a really fascinating point. Those aggressive tariffs, they actually worked in terms of the raw numbers. They literally cut the trade deficit in half, dragging it down from roughly $418 billion to around $200 billion recently. So if the sole goal was just to shrink that specific accounting line, the data shows the strategy made a huge, tangible dent. But wait, is targeting that one accounting number actually a smart move? A lot of experts say it's fundamentally flawed. Mary Lovely from the Peterson Institute totally hit the nail on the head. She said, it's basically like having a trade deficit with your local grocery store, but a surplus with the employer who pays your salary. Just because our money flows out to buy necessary goods doesn't mean we're getting ripped off. In fact, obsessing over this bilateral deficit might completely blind us to much deeper structural vulnerabilities in the economy.
Which brings us to Section 3, the rare earths chokehold.
Okay, this is where things get super critical. The real threat isn't that broad trade deficit we just talked about, it's hidden, highly concentrated supply chain vulnerabilities. Check this out. While Washington was hyper-focused on tariffs, Beijing quietly locked down a whopping 70% share of global rare earth mineral mining. Now, these minerals aren't actually all that rare in the Earth's crust, but extracting them takes intense, super expensive processing, and Chinese industry, they absolutely dominate it. And if you think that's wild, get this. China controls 90% of the processing for rare earth magnets. 90%. That is a literal chokehold. And they've actually weaponized it, deliberately cutting off exports to the US right at the peak of the tariff war. Remember those 145% US tariffs? Yeah, Beijing played this exact processing card in response. It was a massive wake-up call, showing that China could just flip a switch and cripple American manufacturing at a moment's notice. And we're not just talking about the components inside your smartphone. These incredibly heat-resistant, highly magnetic materials are an absolute necessity for advanced U.S. defense tech. We're talking the core components required to build modern robotics, high-tech sensors, and critical military hardware. Without these processed magnets, entire sectors of American innovation and defense literally grind to a halt.
Oh, and it doesn't stop at minerals either. Right now, the U.S. relies on China, either directly or indirectly, for 25% of its active pharmaceutical ingredients, plus half of the entire globe's printed circuit boards. Fixing that kind of reliance isn't a quick fix. Building resilience in these sectors takes years, sometimes a full decade of patient investment. Honestly, these are the true metrics of national security, way more important than counting how many mass-produced shirts cross the border.
All right, Section 4, billionaires in Beijing. So that brings us right to the present day, with a high-profile U.S. delegation touching down in Beijing, hoping to secure some economic wins. Look at this roster of corporate giants. You've got Tim Cook and Elon Musk fiercely protecting massive manufacturing hubs. Kelly Ortberg from Boeing is chasing a pending 500 airplane order, and Jensen Huang from NVIDIA is eyeing a $15 billion AI chip market opportunity. It's a huge, powerful display of American corporate might for sure, but it exposes a really deep tension in U.S. strategy. Because here's the burning question. Are we trading long-term strategic security for short-term corporate victories? Experts are seriously warning that if we just celebrate quick sales of soybeans or airplanes, we might completely miss the 10-year battle for resilience in semiconductors and those critical minerals. If the political administration focuses only on scoring highly visible corporate deals, they risk entirely ignoring the strategic chokeholds we just looked at. I mean, you definitely cannot fix a decade-long rare earth vulnerability with a one-off airplane order. Finally, Section 5, the global economic battlefield.
We absolutely have to realize that this economic rivalry has outgrown just Washington and Beijing. Through hundreds of billions of dollars in patient capital, China is actively securing critical minerals, trade routes, and infrastructure right in America's economic backyard. Take Latin America, for example. China is financing this massive deepwater megaport in Peru, the Shanghai port, to accelerate trade across the Pacific. They're also pouring huge money into lithium and EV production over in Brazil. This isn't just a simple bilateral trade dispute anymore. It is an expanding global contest for infrastructure and influence.
So, as you process everything in this explainer, I want to leave you with a pretty provocative thought. If the U.S. continues to just obsess over bilateral trade deficits, will it end up completely missing the global contest for the future of infrastructure and technology? Understanding the data means looking past the loud, short-term political wins to see the quiet, strategic moves happening all over the globe. Think about it. Thanks so much for joining me today. Until next time, stay curious and keep seeking the full picture.